on exchanges, I can imagine that the average sort of customer segment is very much younger day trading. Ours is much more of an investment long-term mindset and is very much reflected with the average age of our customers being perhaps a little bit older than people would expect. The second thing that might be a little bit surprising is...
What's going on, guys? We got a great conversation today with Seamus Rocca. He is the CEO of Xapo Bank. They're one of the most important critical pieces of infrastructure in the Bitcoin community. But here's the thing about them. They've been around for a long time. They have a lot of narrative violations that they see in their data. Older people are actually using Bitcoin in the geographies that you would not expect. Seamus is here to explain to us who's adopting Bitcoin. What is the impact on the market? How are things like ETFs and Bitcoin treasury companies actually affecting Bitcoin and the people who want to use Bitcoin? And then he talks about where he thinks areas are going to actually be very popular in the future that no one's talking about now. This conversation is a little bit different than normal. It's very interesting to understand from one of the key players in the market what's happening now, who's using Bitcoin, and where is Bitcoin and Bitcoin products going in the future. Here's my conversation with Seamus Rocca. Seamus, a great place to start this conversation is you guys have a bunch of data. You see where your users are coming from. You see what they're doing. And you guys see adoption of Bitcoin in areas that I never thought that we would see. One of them is there is a very large portion of older people. Bitcoin historically has been adopted by younger people, but now we're getting this kind of older generation that's starting to adopt this asset. Explain a little bit what you're seeing here and like what are the ramifications for Bitcoin? Because everyone was waiting for the big wealth transfer for like young people to get their parents' money and then they were going to go put it in Bitcoin. But maybe the parents are just going to put it in Bitcoin themselves before they ever give it to their kids.
There is an element of that. I think there's two things that some of it might be surprising, some of it might not. One is the average age of the Xapo customer, of what we see, and also the geographic distribution. If you think about from an age perspective, the average Xapo customer is middle-aged. They're sort of 45, 50 plus, and I'm probably being kind. And they're naturally quite conservative, which is a bit of a sort of misnomer, because if you think about Bitcoin, it's normally associated with people that are, high risk and super aggressive day trading. A lot of, our customers are relatively early adopters. So they're maybe 50 now, but given that we started in 2013, they probably invested in Bitcoin 10 years ago. And that is sort of the generation that was disenfranchised after the financial crisis, which is sort of when Bitcoin started around 2009, 2010. And early on, they saw in Bitcoin an alternative. They saw something that, hey, at $100 or $1,000 a Bitcoin, the downside risk was very low. The upside potential was huge. And they saw something in Bitcoin whereby, this could really be something. And it's worth me giving it an allocation of my wealth. 10 years later, it's 99% of their wealth. So now it's their most cherished asset, and it's probably something that they're looking to retire with. So as a result, our average customer, it tends to look for two things. One is, okay, I love the security of the vault, but I want liquidity. Now I've got this asset that has gone up dramatically in value, but maybe I want to buy a house or a car or take my family on vacation. So they want to borrow against their Bitcoin. So that's sort of one customer cohort. The other one has Bitcoin and similarly to the first cohort, doesn't want to sell it. They've amassed such wealth with their Bitcoin and they can see even more upside that both cohorts don't really want to sell. But the second cohort is looking for yield. They're looking at different ways of how can I invest my Bitcoin and earn some yield in a relatively risk-averse way. So earning 3 or 4% is much better than sort of these DeFi protocols that promise you 8,000 APR. They're quite comfortable earning 3 or 4% because that's enough for them to live on. So they can live on that at the current price of Bitcoin without needing to sell Bitcoin. So as a result, it's kind of interesting that yes, on exchanges, I can imagine that the average sort of customer segment is very much younger day trading. Ours is much more of an investment long-term mindset and is very much reflected with the average age of our customers being perhaps a little bit older than people would expect. The second thing that might be a little bit surprising is the regions. I mean, we started very much as, our founder, Wences Casares, is Argentinian, and he saw his family lose his wealth 3 times in his lifetime in terms of, hyperinflation and confiscation of deposits by the government. So from that perspective, we were born almost from an emotional response to that, which is Bitcoin is digital gold. For people in emerging markets, Bitcoin is not so much a tradable asset, but a store of wealth, something that you can keep safe and hopefully is something that long-term doesn't suffer the same hyperinflation that your local currency does. And I think that sometimes that in the US or in Europe, in more sort of evolved economies, that's not something that we've ever had to, grapple with. If you were raised in the US on the US dollar and me in the UK and sterling, we never had to worry about hyperinflation. Well, for people in emerging markets, it's a very real thing, and they view Bitcoin as an alternative. So we essentially have a lot of middle-aged people from emerging markets. That's essentially the composition of our customer base.
Now, when you think about these people, one of the things you said is that they're very conservative. And I think that is actually pretty interesting, is because Bitcoin as an asset, on one hand, it is highly, highly volatile. People look at it as a speculative tool. They're buying because they want it to go up 10x. On the other hand, there are people who say, no, I save in Bitcoin and it is my replacement for bonds. I don't think I know of an asset where it's both, right? Like nobody's like, hey, I'm saving in real estate. And oh, by the way, I'm speculating because I think it's going to go up 10x. Stocks, I think people look at it more speculative than saving. And so when you see this, these people in the emerging markets that are going and adopting this asset, I think in the United States, we constantly are like, oh, mass adoption, mass adoption, mass adoption. These folks, though, do they have like $1 million? $20, right? Like, how do you think about how much capital is coming into this? And is it a persistent flow, or is it simply just, hey, I'm buying Bitcoin and I'm holding it, and whatever I bought at some point is kind of my stash, if you will, and that's gonna be my Bitcoin?
Sure. I think it's a little bit more of the latter. The average customer that comes to a Xapo is an early adopter, and either they bought the Bitcoin with us, or over time, as the asset appreciated in price, all of a sudden, the risk of making a mistake through self-custody or having it on an exchange after FTX, that risk kind of got a little bit too high. You almost don't trust yourself anymore to hold on to that asset. If you're 22 years old and an engineer and you're comfortable with code, then self-custody is a very good solution for you. But if you're, like me, 52 and not a particularly good engineer, then I don't trust myself to keep all my wealth as self-custody, because if I make one mistake, I will lose all my money. So from that perspective, there's an element of, this fact that you would trust your Bitcoin with somebody like Xapo means that you're actually conservative from the point of view that you're willing to trust somebody else, but it's actually because you don't feel that you've got the skills to do it yourself. I think that's kind of one reason. And the other one is this idea that we're essentially an offshore private bank is also incredibly helpful, because if you think about Bitcoin is the fact that it's sovereign. No government can essentially manipulate it or print more Bitcoin. There is this element of it's sovereign. Essentially, we represent that in that we're an offshore bank, and therefore, if you've got your Bitcoin in an offshore bank, it's just essentially totally disassociated from where you live geographically. And I think if you live in emerging markets, that's incredibly appealing.
Today's episode is brought to you by Simple Mining. Have you ever been interested in mining Bitcoin? As a miner myself, I've been using Simple Mining for the past few months, and the experience has been nothing short of seamless. I mine with the pool of my choice, and the Bitcoin is sent directly to my wallet. Simple Mining, which is based in Cedar Falls, Iowa, offers a premium white glove service designed for everyone, from individual enthusiasts to large-scale miners. They've been in business for 4 years and currently operate more than 20,000 Bitcoin miners, including mine. Their electricity is over 65% renewable thanks to the abundance of wind energy. Not only do they simplify mining with their top-notch hosting and on-site repair services, but they also help you benefit financially by running your operations as a business. This approach offers 100% bonus depreciation to optimize the profitability of your investment. Do you ever worry about the completion of maintaining your mining equipment? They've got you covered there too. For the first 12 months, all repairs are included at no extra cost. If you experience any downtime, they'll credit you for it as well. And if your miners aren't profitable at the amount, simply pause them with no penalties. When you're ready to upgrade or adjust your setup, their exclusive marketplace provides a seamless way to resell your equipment. Join me and many satisfied miners who have simplified their Bitcoin mining journey. You can even get started today with the 7-day miner trial. Visit simplemining.io/pomp to get started today. That's simplemining.io/pomp to get started today. With Simple Mining, they make it simple. Now, you guys have this vault that you talked about, so I think I'm going to come and come see this thing. We've been talking to your team.
By all means,
I don't know if you know this, right? All right.
Yeah, so, I do.
Now, I don't know if I'm supposed to share this. But I'm going to say, you can tell me later if I got to delete this. But as part of this, they told me I got to go to a location. They told me a location. Okay, this is a place I've heard of before. Then you got to take a helicopter to a different place. Then you take another helicopter to a different place. They said, hey, you can't bring your phone. You got to put it in a bag. You got to. Hey, wait a minute, it's like real security. I thought I was just going to go, like going to a bank or something, right? Describe a little bit as to what's going on with the vault and the security and kind of how you guys have set all this up. And I think that's probably one of the big differentiators and the big things that when people think of your company, they're like, hey, these guys, it's kind of a different game that they're playing than maybe others.
Sure. So essentially what we're doing is, this idea that because Bitcoin is digital, sometimes the security aspects of it feel a little bit intangible. So we've designed a way of doing the custody in that sort of the digital meets the physical. So all of the private keys that we hold on behalf of our customers are sharded. So those are kept in different locations. And then we have a cosigner that essentially brings the shards back together into the original private keys. So that cosigner is what we keep in the vault. The other shards are kept in different locations. So actually, the Swiss bunker that you're coming to see is only one of 4 different servers and locations that we have that build the overall security. And it used to be a nuclear military bunker that has been turned into a level 4 server security. So you're going to have to go through all sorts of securities like you would expect. And it was originally designed actually for storing gold. And one of the best features that I like about it is you need to get on a lift to be able to get to the floor where the servers are. And because they originally had gold, they were worried about people stealing what was in there. So it weighs you on the way back out to see if you weigh more than when you went in, to see if you've actually stolen anything and have anything in your pockets. But that's the insane level of security that we have. And the reason, clearly we can't take all of our customers there, right? But the reason why we take people like yourself, Anthony, is because we want to make sure that people understand that this is neither a gimmick, neither something that isn't real. It's a little bit of a myth, the bunker in Switzerland. And by taking you there, we can actually show, look, this is very real. We spend close to $20 million a year on keeping our customers' Bitcoin safe. And there's an element of, for those, Bitcoin is about financial freedom. For those who want to do self-custody, by all means, knock yourself out. For us, it's a bit like, look, can you compete with our infrastructure? You don't need to. let us take care of it for you. And there's many benefits to doing custody over self-custody. The biggest one really is not just the quality of our security, but more importantly, inheritance. You've got all this wealth. If something, God forbid, happened to you, you want your kids to be able to inherit that money, and we facilitate that through being able to have a beneficiary that you've allocated to that wealth. As an example, there are many other examples, but I think that we wanted to show you the vault because at the end of the day, you can sort of put the voice out there that says this thing is real. I've seen it for myself.
I wanted to bring my phone to get an Instagram photo, and you guys said I can't bring my phone. I said, hold on a second. This is what the heck? Maybe bring like a digital camera or something. You guys can certify the photo or something. All right. So I think a big thing that people believed before the ETFs was, hey, the ETFs are going to come. If they're popular, it's going to be a really big headwind for a lot of companies, right? People just go buy the ETF. The ETFs have exploded. People have been very excited about these things. $100+ billion have gone into them. I could see it going one of two ways. I could see that the ETFs are a headwind and, kind of extract value from kind of the crypto native players. But I also could see similar like bank tellers and ATMs. One of the things that was so interesting is they used to say that when the ATMs came out, that you'd need less bank tellers. Now there's more bank tellers than when the ATMs came out, right? And so it kind of like ATMs increased access. Access led to more people in the financial system. That meant that you needed more people to service them. What has been the impact on the business since the ETFs got approved?
For us, I don't think it's been something that's been noticeable, certainly not up until now. I think what the ETF has done really is it's helped to fast track a lot of the alternative products that I was mentioning before, like this idea of borrowing against your Bitcoin, this idea of investing and looking for yield. With the ETFs coming out, all of a sudden those adjacent products, before the ETF, going to a regulator and saying, "Hey, these are the kind of products we want to do," would have been, I don't really understand Bitcoin. How the hell is this going to work? All of a sudden, when you sort of replace Bitcoin with ETF and it's seen as more of a traditional asset, it makes perfect sense to everyone. So what we've seen is it's actually helped us fast track a lot of the products that we wanted to launch because they make a lot more sense. In terms of the adoption, I think the reality is for new entrants into the market, so family offices, TradFi, the ETF is incredibly convenient and a very easy way for them to trade the volatility. For early adopters that actually hold physical Bitcoin, we're still a very attractive proposition. And also they see us as part of the Bitcoin community. People who are like-minded, we think like them, we understand their concerns, we understand their needs because we're Bitcoiners ourselves. So I think that, look, like with any market, there is room and space for everyone. I think the ETFs are going to be, for the big institutional players in TradFi space. We are here to serve, almost like the early adopters and people that through the price action now really deserve private banking type services that perhaps the big banks wouldn't be able to offer, because if they turn up to them and go, "Hey, I've got all these Bitcoin," they know what to do with the ETF. They still don't know what to do with actual physical Bitcoin.
Well, one of the interesting things is obviously Wences being very involved in the business and helping to create this thing. He kind of is, I would assume, like one of the target type customers or personas that you would go after, right?
Sure,
early to Bitcoin, understands it, wants to hold it, etc. Talk a little bit about him in particular. Wences is somebody who I always say is disrespected in the Bitcoin community through omission, not commission. Everyone knows that he, has done a great job and all this kind of stuff, but I feel like he doesn't get enough credit for how important he was early in Bitcoin, both in terms of kind of orange pilling a lot of these Silicon Valley folks who ended up being, big drivers and legitimizers of Bitcoin, but also, obviously Xapo and many other things in the ecosystem, I think can be traced back to whether it was his ideas, his advice, his capital. He just feels like somebody who was so important, but doesn't quite get the notoriety and respect that maybe he deserves.
I think to some degree, I would agree with that. And by the way, Wences is not just a mentor, but a dear friend, and he certainly orange pilled me, and like you say, many other people. What I would say is, like, the people who know.
100%.
And what I can tell you about Wences is that back in the day he did his evangelizing and orange pilling. And he's taken a back seat to that because other people are doing a good job, but he's still very much involved and he's incredibly influential. And I've never met anybody more convincing in being able to tell the story of why Bitcoin and why you should sort of at the very least either have an allocation to Bitcoin or think about how it could be part of your career. And it's thanks to Wences that I've been now involved with Bitcoin and Xapo for 9 years. And it's not just me, many other people. So I think, but it's one of those things where he has deliberately stepped back because he doesn't want the limelight. He doesn't want that sort of kudos of, I was one of the early guys. Like you said before, the people that need to know, and we all owe a lot to Wences. But, he's at a stage in his life and his career and level of wealth that he doesn't need to be in the limelight anymore.
I I've heard about some of the things that he's been doing. He seems like he's enjoying his life. So good for him. Let's talk about the Bitcoin treasury companies. Those obviously have been a big rise. We talked about ETFs. What have you seen there? Or is there something that maybe they could be potential customers for you guys, partners for you guys? Is there any impact in terms of the customers that you do have wanting to allocate to those versus directly to Bitcoin?
I think one of the things that is super interesting in the treasury space, where we see ourselves being able to sort of be part of that, is similar to what's happening in the mining community, where as if you think about miners a few years ago, they would struggle with raising working capital because they would need to pay for the electricity, but then of course the Bitcoin itself wouldn't come till after it's mined. So you've got all this cash that you need and the Bitcoin comes later. So you're always got this working capital imbalance. Whereas once they became listed companies, they can sort of dilute themselves and raise the funds and have that working capital available to be able to grow. And I think to some degree with the treasury capital model, it's that same ethos. And what we're seeing with the treasury companies is a lot of innovation on how to sort of inbuild leverage within that strategy. So all of a sudden we're seeing, a lot of financial engineering and structuring using Bitcoin that we would only have dreamt about 5 years ago, and is very much becoming a reality. So where we would come in is, look, for our institutional offering, we are a perfect partner for those types of institutions that need to hold, physical Bitcoin, but might need adjacent products like borrowing against it or investing it for yield or being able to convert some of that into stable coins. One of the few, if not the only bank in the world that we replace SWIFT with the ability to send and receive stable coins. So imagine if you're a treasury company, the ability that you have a crypto native bank that can serve your needs feels like we could be a very strong a very strong sort of financial partner to a lot of those institutions. But I think there's certainly opportunities in the space. What I think I welcome is the innovation that's happening. But look, with leverage and any financial innovation, there's also caution. The risk management practices need to be there. But I've got to say, so far, they're doing incredibly well. They're holding out, and it seems that they're being incredibly well run. So it's an asset to the industry.
Hi, I'm Matt Hogan, CIO of crypto asset manager Bitwise. Look, crypto can be confusing. There's so much noise, and the space changes so quickly. That's why every week I write a 5-minute memo on the biggest stories impacting crypto. In plain English. Why is Bitcoin up or down? What are people missing? Where should investors look next? Get the lowdown every week. Sign up to get the weekly CIO memo delivered straight to your inbox. Go to bitwiseinvestments.com/CIO memo. That's bitwiseinvestments.com/CIO memo.
Carefully consider the extreme risks associated with crypto before investing.
When you think about your business going forward, there are a lot of things that are changing in the market. We've talked about some of the access products, both in terms of public equities and ETFs. Obviously, Wall Street is showing up. There's a lot of traditional players who want to custody these assets, whether they're big banks, custodians, other financial players. What are the areas that when you're talking to your team, you're saying, this is what we got to do to win in 2026. This is what we've got to do to be prepared to hold the moat that we have and maybe even gain market, kind of share in the coming year.
I think there's a couple of things, but I would say that the key one is that we want to differentiate on service, which is, if you think about, we are quite a niche offering, and if you have 0.1 of a Bitcoin in your trading, there are plenty of platforms out there that are going to be able to serve you well. But like I said before, there's also a whole segment of people that have a lot of Bitcoin that are looking for a little bit more than your sort of basic services and want that private banking experience of having a relationship manager, of having a high touch, white glove service experience. So I think that's one of the things that, we're certainly going to focus on next year, which is, having that trusted relationship with somebody that understands your needs, knows everything there is to know about your financial situation with Xapo and outside, creates these sort of long-lasting relationships. So in 2026 is really about how we leverage and maximize those relationships and sort of capitalize on the fact that we've been in this industry for a very long time. So that's number one. And number two, I think it's about how we innovate our products. There's a lot of innovation in TradFi, being thought out around Bitcoin or whatever. But again, it's very much with that trader's mindset. The mindset that we have is we think of Bitcoin as money, as digital money, which is what are the things you would expect to do with your money in a bank? How can we make sure that our customers can do those things with their Bitcoin? So something as simple as, we offer the custody to keep your Bitcoin safe, but you can make payments in Bitcoin or in fiat. You can spend your Bitcoin with a card. We've got savings products to earn yield. You can borrow against it, but also even making investments. So the idea of saying, okay, I can buy the S&P 500 directly with my Bitcoin. I can, buy stocks with my Bitcoin. I can live on the Bitcoin standard, because there's a lot of people, especially if you're an early adopter and you have a lot of Bitcoin, selling your Bitcoin is an incredibly tough decision. And I always say, like, selling your Bitcoin is a bit like asking me which one of my children do I love more. It's like, so we certainly want to be seen as innovators in the space in terms of doing more than just trading with Bitcoin, but actually creating genuine use cases of things that you can do with Bitcoin.
Now, when you think through that, is there anything that we have not yet seen in the market that you think will become dominant use cases? If you went back 10 years, no one would have thought stablecoins would have been this big. They became very, very big, right? Yeah. I don't think people would have seen this quickly. Wall Street, basically just bending the knee. I mean, just the market say, hey, you got to get in, right? We saw Vanguard recently. The old CEO said, no, we're not doing it. Now he's not the CEO anymore. What are some of the things maybe that you guys see people doing with Bitcoin or products that you guys will offer where they may not be big today, but you think it's an important part of the market?
I think we'll see a little bit more of the same. And while that answer sounds a bit boring, let me sort of explain that a little bit more, which is stable coins have sort of really taken off with, the banks and what have you, because even though there's all this conversation about CBDCs and everything else, there's a lot of downside to CBDCs. And frankly, stable coins like Tether are already out there. They're operational and they're almost like a genuine use case where banks could be using it today to make transfers and, weekend payments, making it cheaper, faster, more reliable, and all of that. So all of a sudden it's like, okay, we can build this ourselves, and frankly, we don't have the know-how, or we can adopt it. So what I see with stablecoins is a little bit more of acceptance around the adoption of what's already there, rather than every bank trying to create their own stablecoin, which is probably what we've seen in the past. Then on the Bitcoin side, what I would say is twofold. One is more yield products. I think there's, for that cohort of Bitcoiners that've got a fair chunk of Bitcoin, if they're early adopters, their mindset is Bitcoin is going to 1 million. So therefore, I want to create wealth with the Bitcoin. I'm looking for yield, but I don't want to sell. So they're going to be looking for sort of more yield products. And the third and last one I would make is consolidation. There's a lot of amazing technology and a lot of other tokens and coins that are out there, but essentially with Bitcoin being an open protocol, a lot of that innovation can really be subsumed into Bitcoin as either a layer 2 or through, wrapping use cases around it, no pun intended, with, wrapping BTC or what have you. So I think we'll see sort of more acceptance that, Bitcoin is by far the dominant token. The reason why people like Vanguard are accepting is because their customers are asking for it. And that's a massive difference to, going from building, and they will come to your customers generally want this product, and therefore it forces the big players to find ways of being able to offer it. And, are you going to offer 200 coins? No. Customers are going to go to Coinbase or Binance if that's what they want. It's much easier to figure out, okay, let's dip our toe in with Bitcoin. And I think, again, that goes into the dominance of Bitcoin within the space as the widely accepted sort of king of the tokens. So I think we're just going to see more and more of that.
I think you're onto something there, my friend. It's a pleasure to talk with you. You know, we've worked together for a long time, and I think that every single person that has used your product usually comes back to us with some glowing review. So it's great to kind of hear what you guys are thinking about. Where can we send people if they want to check out Xapo and learn more about some of the products you guys offer?
Sure, just xapobank.com. Plenty of news there about what we're working on, what's coming up. Our website is being revamped all the time. So if you've had a look at it recently, have another look again. It's always being worked on.
Amazing. Well, Seamus, thank you so much for the time today. I'm cheering for you guys, and we'll do it again soon.
Thanks, Anthony.